about your currency than you do about us currently. I don't need much, no private key to open up and talk honestly. Cause you're an addict getting mad, you better mask what you mean. In every single conversation, you're out in open sea. It's been so long, so either one, you choose your wallet or me. Well, better hope you're getting laid in Web3. I don't care about your crypto, boy. Not at all, not even one Bitcoin. CEO of being unemployed. I got nothing left to give, no, to another crypto boy.
All right. So that's the intro song. Now we're just gonna cue the intro video. So eyes on the screen, ready for this disclaimer. Let's play the thing.
GM Anon, welcome to today's episode of Market Capping. Before we begin, I just wanted to remind you that I'm not your mom, and nor are any of the speakers on this show. Nothing you hear today is financial advice. You should be a big kid now. Make your own decisions, do your own research, and assume every crypto coin you buy will result in complete losses. If you ever plan on holding anyone other than yourself responsible for your choices, please navigate to the top of your browser window where you'll find the friendly red close button. And now, let the episode begin.
Oh shit! What happened?
GM
Sorry, I think I
Anon,
goofed it.
welcome to today's episode, and
Let's skip to
assume
another.
every crypto coin you buy will result in complete losses. If you ever plan on holding anyone other than yourself responsible for your choices, please navigate to the top of your browser window where you'll find the friendly red close button. And now, let the episode begin.
Boom. All right. Okay, we're live. Hey Small Cap. Hey Wartull. New little sound check. Are you guys here?
Hey, hello.
Perfect.
Happy to be here.
Small Cap
How's it
here.
going?
Perfect. Nice.
Yep.
All right.
Good to
Welcome
go.
everyone. Well, here we are on Market Capping with our guest Wartull. So Wartull is one of the core team members on the Olympus team. He was there as early as I can even remember. And today we are in a brand new background. So the Anatar team kindly made us this classroom, and we have Wartull up on the chalkboard. But yeah.
So sweet.
Yeah, it's pretty
I,
cool.
I like it.
Thank you. So today's episode is going to be a little bit different than what you're used to in terms of Olympus calls. This isn't FOMO 3, or this isn't like an intro to what is OHM or anything like that. We're assuming our audience knows what OHM is excited for OHM and whatnot, so we're going to just dive straight into the goods. We don't need to go through like what are bonds or any of that kind of stuff. So to get started, Wartull, do you want to just do maybe a really quick intro on yourself, like 30 seconds, and then go into our first question, which is just, if I'm a new buyer of Olympus today, like what's the pitch? Like why should I buy an OHM in terms of like what's the bullish future? Or even if I'm an old buyer and I've had OHM, like why should I be buying more now? Because I think the narrative has completely changed from like the rebasing and like growing treasury via bonds and whatnot, because we're trading at a high multiple to cash. But yeah, let you take it away.
Yeah, no, I think that's a great start. So, hello everyone. My name is Wartull. I've been in the industry since 2015, and I've never left. Thought I was a trader for a while, and quickly discovered by my network plunging that I wasn't. So I started contributing to some projects, and most notably Olympus. Indeed, I was there since the start, and now I'm one of the 7 council members. That's my background, and I maybe on your second question, what is Olympus not? But why would you care now about Olympus? And if you're a holder, or if you had OHM once upon a time, why would you want to have OHM basically in your wallet? On that question, I really think it's quite simple. Indeed, we had like this early phase where there was all this focus on APY, on yield, right? And I'm doing here air quotes at home. And I'm bootstrapping the protocol with these $20 million a day bonds and stuff. But I think we now have this coming of age moment where we are really moving into getting OHM into the hands of these protocols that really need things like liquidity, diversified treasuries, and so on. And I think if you now hold OHM, you will really get on the train for that growth, that supply growth that is much more sustainable than, for example, the 200K APYs that we were used to. But you're really getting all these different things that we will talk about today. You'll benefit of that by actually getting a percentage of the network that you will keep as well. So it's also in that aspect, I think, in the bear market that we're in, and I know that some people are now thinking we're again in a bull market, but let's be honest here, we still have a long way to go.
Small bump, yeah.
Small bump, exactly. A head fake, right? I think almost like one of these assets that you can just hold and sleep on both ears. Like when the market was tanking the past months, I think almost one of the best assets to hold. I think, for example, if you would have bought ETH 6 months ago or OHM, you would have been much better off with OHM. That's one of the examples. So in that aspect, I think it's a perfect bear market asset, and I hope that we can discuss today why that is and what's in store for the future.
Yeah, I see what you're saying. It's kind of like the volatility is kind of compressed, right? When ETH is up, liquid backing goes up, so OHM goes up. When ETH is down, there's a bunch of stables in the treasury, so it goes down less. So that's really good. And then you get all the optionality of products and whatnot, which you're building, which will be fun for us to cover. So first one I think we wanted to cover was just like did we want to do bonds first? Yeah, bonds, right? So we saw that you guys are splitting out OHM Pro. So you're splitting it out into bond protocol. You want to just give us the rundown of that?
Oh,
What
for
you
sure.
can.
Yeah, no, I
If you can.
I can be
Yeah.
very, very open about that. So Olympus Pro indeed was this spin-off, you could see it, of the innovation that I think Olympus brought with bonds, right? Bonds was something that no one did in this industry, and we saw it working very well, especially with protocol own liquidity, which for a lot of projects changed a lot, I think. But we had a lot of people coming and asking like, can we fork your code right on Forex season, or how does this work? But no one really knew how to run this, right? No one really knew how you had the parameters to make it not really crash. So that's why we thought, okay, we have the knowledge of that in house. We have a kick-ass policy team. We have the product, so like we have the code. Let's make a product around it. But over time, and especially with the recent market changes and so on, we noticed that Olympus Pro was exactly that, a product. So it detracted a bit from the message of we want to be this reserve currency for the industry, because we had then this other product, which was called Olympus Pro, which still brings in revenues, where all these partner tokens that came in, for example, Alchemix was still is one of the bigger players out there, right, on Olympus Pro, that these tokens came into the treasury, they were used as backing. But yeah, we could never really sell them because they were a partner of Olympus Pro, for example. That's a thing where there was like a conflict of interest between being a reserve currency, where in some potential situation you might have to liquidate that, and being then that product offering of Olympus Pro. So it's really this split makes a lot of sense, because what we're doing now is really saying, look, Olympus will focus on the main goal becoming a reserve currency, while still having the IP and everything related to that in Bond Protocol, which is a separate team, and also will have their own resources, so their own developers, front-end people, and so on. And they can do really cool, wild stuff that wasn't possible within the DAO itself.
Right. Okay. So
is there a key OHM like team member that's like front and center of that, or did you hire almost a complete new team? I think it said what, like 60% of like Bond Protocol was owned by OHM. Like, is there any overlap in team, or is it completely new?
There is overlap, of course. Yeah, that will always happen. I think for people that know Olympus maybe a bit, like Dex is the main front runner there that is really championing Olympus Pro and now Bond Protocol. He's been a contributor since the early days as well, so he's really knowledgeable, and I trust him to to take this to success. And also, of course, there are some resources within the DAO that have worked on this, and maybe want to work more and focus more on that front. But you have to think at our main point, we were 170 paid contributors, so there are a lot of people there. So we can still it's not like the DAO itself will feel this split, because
That's huge.
a very minor part of the total operations. Yeah, that was huge. Now we really reduced this, not only because of market conditions. We actually started this process already like months ago, to like 30-40 people, to be much more efficient with time. Yeah.
Is it like was there like a simplification aspect, or was it legal, or is there anything that really drove it to be split off?
100%.
Was it just easier to manage it that way?
100% simplification, because it is like being in a DAO, and I think some of the people watching maybe have spent time in DAOs. It becomes chaotic very fast, and especially if you don't really, if everything goes well and it's like up only, of course you think everything you do works, and you think, okay, well, this is validation from the market, right? But in a downturn, that really it doesn't work anymore. So there we thought, okay, now we need to really hone down this message of what do we want to be, and focus all our attention on this, because this is a unique opportunity right now, right? Like everyone is still here, still has a lot of interest. DeFi, there's still a lot of protocols that have been funded with millions and millions and millions of dollars that also need solutions that we are actually providing. So let's make the most of this and really focus on becoming that reserve currency instead of being a product shop. I think there are better protocols that serve as a product shop. I'm now thinking, for example, of Redacted, right? That has a lot of different products that it helps them. And Olympus is not that, because then we would become like a Redacted. And then it doesn't make sense that we both have similar products.
Okay, I think we're tangenting here. I have so many questions about like revenue versus being reserve currency and things like that. But on the OHM Pro topic, so one hard question then, I guess that relates to what we were just saying. But then, who owns these revenues? Like when Olympus Pro makes money, that money is now not for the treasury, right? That money is now for this new Olympus Pro product, right?
Bond protocol.
Bond protocol. Okay, and then Bond protocol makes money, but then is OHM gonna own all of the equity of Bond protocol, or like who owns that equity? And is there gonna be a token? And if there's gonna be a token, does that token represent ownership of that protocol? And how do we get that token, or who gets that token?
Yeah, when's the airdrop? Is what he's really asking.
Already going into alpha, minute 10. Okay.
Let's go.
No, so these are all also things that we still are discussing, right?
Okay.
It will come down to Olympus owning a significant, like more than significant part of Bond protocol. We will benefit from it. It will add to like the backing, or like the assets that OHM holds. But in what capacity, we need to see from a legal side what makes sense there. And we were definitely working to make that like rock solid for both, of course, Olympus DAO and Bond protocol, because they also need some funds to run this now, right? So
okay,
that's most I can say up until now.
That was a masterful sidestep, if anything. Maybe you should work in politics. I love it. So the OHM Pro treasury right now is like $2 million. So that $2 million, does it go with Bond protocol? So now that protocol will take the treasury and continue with it, or is this like all this like FXS and DAI and other from the historical bonds stay with our treasury?
That's probably going to stay with us.
Nice.
It's, I think, more than this. These type of dashboards are hard to like maintain.
Yeah.
But that's probably going to stay, because like these, as we also said in the OIP, right? The original bond contracts of Olympus Pro will still be with Olympus itself, and then everything that's new that they will call V3 and so on, that will be with the new bond protocol.
Nice. Yeah, I love it. Okay, cool.
And then I took a look at the Twitter earlier, and did like the bond protocol one, and I mean, it's still like alpha level.
Yeah.
It's like 280 people, because it was just announced yesterday, and there was like the announcement I think slid through the cracks too. So I mean, it's kind of being early to that, but
well.
I mean,
you have to think like if you would release a product right now, right, or a protocol right now with proven utility and proven revenue streams, and you were that early indeed, like the number, what is it now, 500 followers, right?
Yeah.
That would be like considered in a bull market a protocol that would go for whatever valuation, right? So
Billion.
I'm quite excited about it.
And-
Not a billion. That's
Yeah.
that's older horses here, but it's cool to see. It's cool to see, and especially since now they can innovate into like very crazy shit that wouldn't have been possible. I really like this move.
And is Olympus gonna run its own bond still, or is it gonna now use bond protocol for its bonding?
No, I think we're still going to run our own bonds. Yeah, because of course they run a best also towards our side. Like also the inverse bonds run through it as well. So I mean that would make more sense that we hold that in ours, and especially also, yeah, we don't want to just divert too much ohm away, right? For something that we have already built in the front end. So
Right.
yeah.
Okay. And a little higher level question on the bond protocol side. What's your like base? Do you still think the thesis for bonding makes sense? Like what I found was very early on, bonding was a lot of fun because I, as a user, was kind of making a bet where I was like, I want to acquire a lot of this, and if I buy it directly, then I will slip it too much. So it's better for me to bond and slowly vest it, so I both get the discount and I don't have to worry about slippage. But then I think what happened was people realized there was this opportunity where you could write bond bots where you could get the discount and then you could just like kind of nuke the token as invested just to like lock in your discount. It's kind of like an arbitrage where you bet on the price not being too volatile or not falling for that 5-day window. And I feel like kind of what's happened in more recent times is a lot of bots have been chewing up these bonds instead of like real users. That's just like a hunch. That's not like a actual thing I measured. Would just love to hear your thoughts on like, are you bullish on bonding for protocols still, or do you think the use case of bootstrapping a treasury with bonds is completely different? Like, I still like the use case of like bonding for NFTs that like Paragons did and things like that. But just curious on like the problem space for bonds and if you think that's changed or even grown.
I think it's a double-edged sword, right? Because in one way you want indeed to have the normies, let us call us like that, or the real users to be able to buy these bonds at good prices and so on for you. If then these bots come in or like these MEV actors, what it does, it makes the market more efficient, right? So what we saw, for example, in the beginning, also with our own bonds, was that these discounts were quite high, right? So people actually had an opportunity to ARB, as for example you did as well, with these bonds. But the discounts that the protocol had to pay, which for them is a premium, was quite high. So it was not as efficient to run these bonds. When these bots stepped in and you saw multiple bots fighting against each other, these discounts dropped significantly, which in the end is better for the protocol that's doing them. If you go more to the core of like, is this better than just emitting it for LP, right? Is it then you have more of the mercenary aspect of pool 2 and of LP rewards? Like that LP can just leave. Where at the end, if you do like these bonds, you actually still have the asset, and that's where I think Alchemix really did a good move by for example doing bonds for just one asset, for USDC, for example, instead of for the LP itself.
Right.
Similarly with their Convex that they also acquired in that way. So I think it still makes sense. It should be really well thought out, and of course, as we saw with like all these small protocols that basically wanted to ride the coattails of Olympus, right? They had like capacities of 20K a week or something or whatever.
I thought that was like basic. I liked that. Well, I'm not like that, but for me, like I saw a lot of these protocols using it mostly for marketing, right? It was like a good way for you to like get the Omis to come learn about what you're doing because you're kind of creating a little bit of revenue for them. But now I don't know if that's the case on why you would use it.
No, and then like also if you then look at this dashboard and whatever, like it didn't for the protocol also itself, it didn't generate the returns as well to justify putting like a account manager on it. Like I'm calling it very corporate now, but you know what I mean, right? Like people that are really looking into it, providing the contracts and so on. So for us, even for Olympus, it didn't make sense to have that many small protocols in the end, and we learned from that and we adjusted. But I think. Especially also in like non-mainnet environment, it could definitely work because of the gas fees, make it even more efficient in that sense.
Okay.
I mean, I feel like this is a big time for protocols to want to do bonding, though. I mean, like I've been spending a ton of time tweeting and talking about Balancer and Aura, and like I mean, they're running into an issue because they launched in a bad environment that they want to sell their token like and do a bonding like it would be perfect for them where they stand. I think it's a few weeks out, maybe at best for Ohm. I've seen some tweets that it's coming, but and some governance proposals, but like there's a lot of protocols that are like, hey, how can I sell my token more efficiently? And I think that's a big thing when you're talking about a market that's strapped for stable coins or strapped for being able to pay a lot of their large teams. So like I think this is the perfect environment for bonding to be used. But that's kind of my 2 cents, like being able to do a deal where it's kind of counts as OTC and you're not just dumping on dexes or
that's what I'm saying. Yeah,
really killing the price.
Yeah, bonding is like the use case for bonding today seems like a gradual fundraise in whatever you want, right? It can be in tokens, it can be in LP, like whatever you want to acquire, right? But it's like a gradual fundraise where instead of you selling onto the AMM, your users are giving you money instead of giving the AMM money and still getting your token. And then the protocol gets to keep the money and use it however they want. I can almost see like pseudo bonds where a protocol puts up like a UniV3 wall and it kind of gets eaten through, and then puts up another UniV3 wall and it kind of gets eaten through. So that's why I'm curious, like what other use cases are there other than as a fundraise? But maybe there just aren't any yet.
Yeah, I think the NFTs is definitely a nice addition as well. As you saw at Paragons, it was a very successful one, I would say.
Yeah.
Did you guys walk through that? Like I wasn't a part of the Paragon. Like I didn't follow that. So
yeah. So
can you walk through like how that worked with NFTs?
Basically, what they said is and correct me if I'm wrong, this year because it's been a while, right? But they said if you have any of these types of NFTs of parallels, right? I think it had to be within a certain collection. You can basically give up your NFT, and over time we will give you our token, right? So basically like an LBP, but in bond version, which is quite interesting. So that has, especially in NFT market, that wasn't done before, and it really worked well to get the NFTs in the right hands, I would say, of the users. So
can you only do that with floor NFTs, or like how did they value the NFTs?
That's what's cool is you can make a different bond for every NFT. So you had one bond for prime keys, you have one bond for masterpieces, you have one bond for like special edition cards, and things like that. And it works really well because like you can't just like nuke into the markets or like buy into markets for these things because they're generally pretty illiquid. And it's also hard for you to swap your token for an NFT because then you have to sell your token for ETH and then use that ETH to buy the NFT. So you would have to like kind of market sell your token. So this is a much easier way for you to say, I'm giving up my token and let's bootstrap this treasury together of NFTs. And I think it's a really cool way for like gaming DAOs to get started. So I liked that use case in the past.
Fires me up.
Yeah.
I mean, like that fires me up. Like I spent like probably an hour on a podcast yesterday with the redacted guys talking about like floor DAO and bribes. And like I was still learning about a lot of that stuff. But like I mean, like it just makes me happy hearing that the NFT guys are going to be using DeFi without knowing it. I mean, expanding like into that. Yeah, exactly. Like the more that where they're being pulled into the DeFi market, like that's massive because that's like a big onboard of I feel like your everyday like users. Like there's a lot. It's a lot easier to break down the barriers and get into NFTs than it is DeFi. Like, I mean, that's an opinion, I guess, but like, I think most people would agree with me there. So like being able to find ways to incorporate the NFT markets is massive. Yeah. So, I mean, awesome. Let's go to the next, doing bonding there.
Let's go to the next topic. So next thing is we want the Ohm number to go up. And I remember in the past, there was that whole like fiasco with like Itchy. Remember they had this UniV3 wall and they would slowly move the wall up and then people would be comfortable buying, but then suddenly the wall disappeared and the whole thing died. But around that time, Olympus was working on something that people thought was similar but is actually quite different. And I know now you guys have this plan where you want to put these walls in where you buy Ohm up when it's below some moving average and you sell Ohm when it's above some moving average, and it's kind of like a unique way to like use the assets in the treasury to move Ohm often above its backing, and then when price moves up too much to sell some Ohm and put assets into the treasury. But I haven't seen much about it just like in the forums and on Twitter and things like that. So I'd just love to hear from you, like what's the update on the walls? How's that going? What's the bullish future? Just give us that spiel.
Yeah, so the walls is basically a mechanism that has existed in monetary policy, I think, for for at least 80 years or something. So you have to think of it as ohm being gently pegged. That's
Okay.
what internally we're talking about it. So it's not like we have strong conviction that we want to have it at a certain price and we will defend it no matter what and like basically bankrupt the treasury on it. So you have to think of it as we will take a line, right? And that's a moving average of the past days.
Yeah.
And we make a quite big range above and below it. So we say, I'm just saying numbers here, right? But this is decided by the policy, 40% above, 40% below it. If then the price would fluctuate too much to the upper side, what we would do is we would indeed sell more of the bonds into the market, and we will indeed just make sure that it's like it goes up by the delta that there is, that the price is a bit contained by emitting more into the market. Basically, what quantitative easing wanted to do as well the years prior to today, right? On the other side, if we go too low, we would do the inverse bonds. So we would actually just buy ohm from the market, and we give you assets back from the treasury. So that again we support the price in that way to the upper side. But it's not in such a way that we would say, okay, if we now break through a wall, break through that 40%, we will just keep on selling our treasury assets for ohm just to try to support it. No, there will literally be like a factor in there where we say, look, if it breaks through it, we are going to let it break through only until it comes back within that range that we have set of this 40%, because the moving average will basically cause the walls to go down in a sense.
I see. So the
in that,
moving average will move it down. It's not going to be like if it breaks through, then you'll add a new wall or something along those lines, or you'll buy it.
No, exactly. We'll just wait, and that's a good mechanism, because of course it will break through it, right? Like we've seen with Luna, everyone thought the peg can be broken. People that have bet on pegs not being able to be broken for especially decentralized systems, but also just in the real world. Think of Black Wednesday when George Soros made 1.2 billion, right, by breaking the peg of the pound against the euros, for like the euro currencies. Yeah, that was also not possible. So we really expect this wall to break, maybe to the upside, maybe to the downside. We'll see. But that's no issue, because then again we can sustain that range, and over time people will think, okay, it takes quite a big amount to sell into this, because you have to think about outstanding liquidity, how much you will have to sell or buy from that moving average, right? We were talking here about now 40%, can even be 60, 80. To get to that point will take a lot of capital. So the cost of breaking it will become so high that in a sense then the market psychology will step in and say, look, they're going to defend this with substantial amounts, but not, of course, treasury breaking amounts. So why would I take the effort to really try to look for these wall ranges when actually for me the benefit will be quite low? So that's a bit how that wall mechanism will work. It's also fully automated, which is quite cool to see.
Wow,
Of course, parameters need to be set by the policy team, where we say, okay, we're taking this many days of moving average, we're taking these amount of cushion zones, of, for example, also the wall percentages and so on. But in that sense, it really will make sure that we optimally can deploy treasury assets in that way. And then we are running actually like really heavy simulations on this. I think we're now doing this for the past 2 months. Exactly, 2 months already, where like we have a team of 6 people just constantly running simulations of what the optimal parameters would be for this exact model. And yeah, it's exciting to see for me at least.
And are these walls, are you going to put them above liquid backing, or are you only going to do them below liquid backing?
Well, it would make sense to do it above, right? Because below we would actually be already in that cushion zone where it makes sense for us to basically buy it back already. So so we really would like to see it that we have a premium first, or like some sort of
and then you'll
premiums,
do them
and then we set it in there. And so the status of this, as we say, we're running simulations now. It's an audit. First audit, we're going to get a second audit on this by like very good firms. So that we're sure that also the economics behind it work, right? Because it's such a, it's not complex, but it's such a pivotal system for the future that we want to get this right. So the code is ready, but we are just going to fine tune it to to perfection before we release it.
And do you think this replaces bonds, or do you think you'll have bonds as well? Like for me, like the top wall is basically a bond, right?
Yeah, but it works with bonds, right? So indeed, we use bonds to emit into the market ohm if we are like overheating, for example, like we had in autumn, right?
Yeah,
When it overheats, we basically say, ho, slow down, let's
that's
let's
bond.
yeah, exactly, let
Right.
more bonds, and then other side, we'll of course buy back when needed as well
Okay, amazing.
through
Yeah,
inverse bonds that are going on right now.
I see. So when these walls, are they gonna be bonds, or are they gonna be like Uni V3 liquidity pools?
And currently with bonds, we can have a lot of
You can do
different
it all with bonds, probably.
implementations. Yeah, we can do it all. We
Okay,
have
nice.
we have looked into UniV3 though already, like also. So there are a lot of options there, and we don't want to like,
A mix.
yeah,
You'll do
yeah.
a mix.
I don't
That
know. We'll
works.
see. We'll
I,
see.
I mean, just like looking at bonding, like where it's come from. So many protocols, especially like algo stables, have tried it, and like I mean, I have a bunch of like old bonds that are absolutely worthless. So if you guys are able to like go through audits and prove like that innovation that it works, like basing it off of walls and like really audit it, like that's a huge innovation for DeFi. I mean, it might not work for every single algo stable, but I mean, even looking through the 3AC docs, they held DSD bonds. Like, I
Mm.
don't know if the liquidators are going to try and sell those. I doubt it, but like they're worthless. And like being able to do the inverse bonds, I think is what like really held a lot of, I'm going to say DeFi 2.0 back. And I mean, that's also why DCF here is your RFV god, because he's able to take like some of those protocols that can't do inverse bonding. So, I mean, that's a huge undertaking. I'm pumped to hear that you guys are that far along.
Nice. Yeah, I love it.
Like, is that fully live or like where is that
No,
in the process?
I think he's saying it's gonna come out pretty soon, right? Like it's being audited right now.
Um, yeah, it's being audited for the first time, so we are going to take the comments out of that,
Nice.
rework it a
Yeah.
bit, and then audit it second time, definitely. And then see how we have to set the parameters. Is going to be launched like very slowly. Like you're going
Yeah.
to have a very
I was
like
gonna
high
say,
ranges.
what's the capacity gonna be like? Like, if you had to estimate like where capacity starts and where it ends up?
Oh,
What do you think?
yeah, I don't know. Like it also depends a bit on the market cap at that point in time, treasury
Right.
assets that we have. So it's very difficult to estimate. But it would take like a good amount of money, like billion plus of money to break through a wall at least. So I mean
Right.
that's already something.
Yeah. Okay, I love it. Um, Next thing we wanted to kind of talk about. Well, you kind of alluded to this before, right? Where you're saying Olympus isn't supposed to be revenue generating. We're focusing on being the reserve
Mm.
currency, right? So
Yeah.
one thing, like one narrative I really liked before was the like Ohm economy, where it was like, hey, what we're trying to do is we're trying to bootstrap a bunch of projects, or projects will come to us and maybe they'll get some Ohm and we'll own them, and then those projects will make revenues and then we'll earn part of those revenues, and then our treasury will make money and everyone will kumbaya and we'll all win together. But going forward to today, I think maybe a lot of those projects didn't do as well as expected, or there aren't as many projects like feeding revenues back into Ohm, and now we're pushing out bond protocol, or what was generating revenue outside of Ohm. So it feels like Ohm doesn't earn revenues other than like maybe bonds and swap fees and things like that. But as a project, it doesn't create things that people want to pay fees for to use. And what I was hearing before is like you feel like that's on purpose, right? Would just love to hear some more color there on
Yeah.
like how does this trade at like 10x cash again if there is no like natural revenues, or is it never supposed to? Would just love to hear color there.
So maybe first on the revenue aspect, right? So I think the narrative indeed got a bit lost with people seeing us a bit like a hedge fund, right? We're making this amount of money per day on
Yes,
our
that's
deployed
definitely how I saw
assets.
it.
Yeah. So we really try to avoid it now. I think for reserve currency, you don't need to be in the most degen forms like Anchor, for example.
Yeah,
Even though we had some USD, but we didn't put it in there luckily, and other stuff. So we really want to be very safe with our treasury allocations, and also very very conscious that we use decentralized options as much as possible. That's also why I think we at one point and still are, I think, one of the largest holders of DAI out there, right? we really want to make sure that these assets are put to work in a sense, but there's also still enough held back to support the activities of the protocol. I think that's a
Can you
big
expand
difference
on that?
there. Yeah.
On DAI, like why DAI? I guess over USDC or USDT. Is it for the decentralization, or I saw like that you guys were putting a proposal for Balancer, like adding some liquidity there, and it was paired. It was like Ohm, ETH, and DAI, which I found interesting, but just kind of curious as to, I guess, the thought process there.
Yeah, the thing is, we had a lot of, for example, Frax as well, LUSD, but you don't want to become the too much of a monopoly owner of that token, right? So in that sense, I think DAI is the best alternative still out there. There should become better alternatives, I would say, in the future, but. That's why DAI was chosen in the beginning. At least in Zeus's vision, DAI was at that moment in time also the best option. At one point, I think we held 10% of the fracs. We held 15 to 20% of LUSD. So I mean, that's not healthy, right? You cannot hold that amount and then reasonably think that you could, for example, in a catastrophic event, exchange that for other aspects. So that's why we focus a bit on the reality of DAI. Being the biggest out there, they're also are relatively stable in their governance. At least we hope that they will keep on doing that.
Knock on wood,
yeah, exactly. But that's why we chosen DAI.
Well, I guess what is I mean a hot topic for DeFi lately is risk management. So like, what's that look like for you guys? Who is helping make those decisions? Do you have like a large risk management team with like some skills there? Like, what's that process look like to make those decisions?
Yeah, so on that we have a treasury team. I think it's three people, but also with council oversight. Go through like a risk matrix that we have, a framework that we have built. I think for close to a year now already. So that we really go one by one. Okay, is this? Of course, has it been audited? What is the history of the team? Do they have like a consistent policy as well? Though, for example, if they go to governance, like we saw with the Juno thing on Cosmos, right? Are they maybe going to do some crazy shit like take a whale's wallet and do stuff with that? We also then outline a bit like, is this a decentralized option or centralized? So, for example, we looked at some. Yeah, there were some CDFI options as well, where a lot of protocols put money in, and that we left like to the side as well because we thought, okay, it needs to be a bit more centralized. Like this team of three because does that job. Because if you go to like too many people, you have too many incentives also to maybe push your own backs or like bring in some like proposals that others would maybe disagree with, and you have like that debate, but there's very much inaction. So we really try to limit it to people that are really knowledgeable about it, that deal with this day in, day out, and then with some oversight, of course, from the council. And if there's major positions that we do, of course, that's always voted upon by our community. So I think that's also important.
Yeah, nice. I think you guys are some of the best in the game with that too. I used to go on the website and check what risk levels that you had for different protocols. Oh, yeah. I don't know if it's still there. You guys do have one of the best websites in the game. But like I used to like go and look, hey, like what based on this protocol, like where does Ohm actually have them as from a risk standpoint? So
it's not easy to do that, right?
Very safe.
Like these options. Oh, if DCF says that something is very safe, then it's probably then it's probably already a bit degen. But no, indeed, like this transparency thing, like the treasury dashboard that we have, everything is out in the open. That seems, for if you're just an investor, that seems to be, what it should be, right? But for a protocol with so many contracts, allocated contracts, wallets, and so on, it's very hard to do so. So we really put in a lot of effort to get this out there, and also to put the website in such a way now, and I think we are getting to a good state where we portray the right vision that we have for Olympus. So, for example, since I think the past week, we replaced everything that said yield, for example, because we think yield in DeFi is some misused term, right? Like if you now go to the APY, where it used to be APY, I don't have a website in front of me, but we renamed it to what it actually is. Right, it's not a yield, but it's a rebase, right? An inflation actually. So that's some of the things that we really try to focus on for like
Annualized
the next.
rebases. Yeah,
Yeah,
that's very
exactly.
clear. Yeah.
Which is a
Yes.
much better term, and everyone
It is.
should use that with the same
Yeah,
model. But
it's
like,
much more
at least
honest.
be honest.
Yes,
Exactly.
I
So
agree.
we really try to frame ourselves now into the sense of, okay, we have the bear market now. People are maybe we don't have that many eyes on us anymore. Let's get everything in order because we really believe that this is like the next leg up quite soon. So
Yeah.
these little things
Okay.
will help.
So I think this is a lot cleaner, but I'm still confused how I'm supposed to think about Ohm. I think we were
Mhm.
just about to get there, but like on
Okay.
am I buying an Ohm to be like, okay, I believe this treasury is going to grow, and I will own a piece of the treasury, and as the treasury grows up, my investment will go up, and through their various tools like inverse bonds and regular bonds and the walls and creating liquidity and things like that, there will be some sustainable demand for Ohm, so the treasury will slowly creep up
No.
and my number will slowly creep up because they'll stay pegged to it. Or am I supposed to think about it as one day this is going to trade at like multiples on cash again because they have all these like revenue
No.
generating things.
Mhm.
And I think before it was the latter, but now if it's the former, I probably should be buying Ohm for like safe, slow growth and not for like degen, do a 50x tomorrow. Right? Or wrong? I don't know. How do you
Yeah.
think
No.
about
No.
it?
I think that last part definitely is true. So it won't be a 50x in a few
Oh
weeks
yeah,
or
that
months.
was like obviously yeah.
I'll never say that. I also a bit disagree with the slow growth part. I think your
Okay.
most of the statement was correct. It's indeed you will have a part of the network, right? If you now
Yeah.
buy Ohm and you hold it in Geom, for example, you don't even need to do anything. You basically have like a part of the network which you will benefit if it grows from, right?
Yeah.
And indeed, over time, with everything that we already discussed, but also other things, of course, and through the economy that we may go into in a second, but like the amount of volume out there and treasury and so on, but everything related to it will also grow. So you indeed keep that percentage of the network, and we see that as growing together with the industry as well, with DeFi.
Yeah.
And of course, then exponentially with the amount of people that will use Ohm in the future. So you are indeed like how I see Ohm is that you hold Ohm to be basically like a very a very how should I say it? It's very in tune with DeFi in general. So if you believe that DeFi will have a future and will be like very valuable towards more people than are just now in here, you think if you own Ohm, you basically have some part of that as well, and especially more because like more protocols will start using it with all the things that we're building.
Okay.
It's a very long
It's a
answer,
hedge.
but yeah.
It's like a hedged long on DeFi is how I look at it.
Yeah,
It's not
it
as
feels like a
like
DeFi fund kind of thing. That's very heavily stable and secure.
yeah.
Not a fund. It's more like
A
a
reserve.
critical infrastructure piece, I would say. So, for
Okay.
example, what used to be the case, right, is was all these central banks were basically also owned by by banks, right? The central
Yeah.
bank of France was, for example, owned by multiple banks. Because you're a central bank, you can do so much more than just a normal bank can. And like it's a critical infrastructure to keep an economy healthy and going, and
Right.
and do things like lender of last resort or like setting some type of inflation rate and so on. And that's basically what you're buying. You're buying a key piece of critical infrastructure for DeFi in general, not
Okay.
just a fund. We hold things in our treasury, but the treasury isn't the main selling point.
Okay. So now
Yeah.
that's perfect. That's what I'm looking for. Now, what is the main selling point? Like if I'm here, what's the metric I care most about as an Olympus holder? Is it treasury growth? Is it how many people are using this as a reserve currency? So how much liquidity is there against Ohm that isn't just like protocol owned? Like what is the metric that matters most?
Hmm. I think adoption is one that
Okay.
is very much
And what do you consider
important.
adoption? Like Ohm in end user
Number of
wallets
users.
or
No, no,
liquidity?
no.
Ohm as
I think I
liquidity?
think I think liquidity is very important there.
Okay.
That's what we also most of the new things that you'll see are focusing on, like mint and sync, flex
Mm-hmm.
loans, that sort of stuff.
Yeah.
I think treasury is an important metric, but what happens too much is that people focus too much on a treasury. But then I would say, like, what is a treasury of Uniswap, right? Basically their
Yeah,
own
I totally
token,
agree
or
with
like
that. Yeah.
any other token. So that's a bit the crutch of Olympus, where because we have 300 million plus in treasury, people start thinking they should be worth 300 million. Well, any other project out there doesn't have this, but we are basically having to fight against that. And that's why we want to step away from, like, look at our treasury and our treasury growth, which is important. But there's so much other things that you should look at instead of that.
Yeah. I
So
think
if maybe internally, like, what are you guys really KPI on? Like, if you're saying like 5 years from now, here's where Ohm's a success. Is it maybe multiple billions of dollars in liquidity, or like, what do you guys, I want to say, push for internally as far as like success measures?
I think that these success measures are quite clear. We have like these KPIs for the entire protocol with like a bonus structure attached to it as well. I'm pulling them up here. One of them is being relatively stable. Another one is also being, for example, compared to the market, like have some growth towards it, so that we're not just going with the market, but actually are outperforming the market. Let me open it up here. We have some other KPIs. Sorry for that.
So when you say outperforming the market, what do you mean by that? Is it outperforming ETH or or?
Well, so one of the KPIs says that, for example, and this is very arbitrary, right? But like that we should be, I think, in the top 90 or 80 of market cap for projects. That's like a short-term KPI of ours. There should, of course, be treasury growth as well. We should become more decentralized. That's also a big KPI that we want to have with like on-chain governance and stuff.
Yeah.
So these are the metrics that we're really working towards.
Okay, nice.
Yeah. I mean, that's fair. I think the stable one's super important as well.
Yeah,
I mean, it comes up a lot that people talk about unit bias of like, hey, if a token's super expensive, like 10, 15K, people won't buy it. I also feel like inflation doesn't get talked about enough in that conversation, where if you're diluting yourself and like from your tokens going from $100 to $10 over like 4 or 5 months, like seeing red every day when you open CoinGecko is painful. Like there's a lot of people that like they think of that as losing money because they don't calculate in their APR, APYs, and earnings. So, I mean, kind of what you're putting together with like walls and I mean, I just really dove into the LP bonding concept. Like, I'd love to chat a little bit about that. Like what exactly that's going to look like for you guys as well. Maybe, I mean, I think that stabilizes price.
Oh, for sure. And like on stability as well, like for example, it shouldn't be the case that indeed you wake up and have to check the own price and be be afraid that it's down 20%. So that could be like then a perfect asset to put in a Vesta vault and mint Vesta stables against it, right?
Let's go.
Like,
good chill.
Yeah, well, we both investors, so disclaimer. But but like that should be like the perfect asset to put in there, where there is some growth to it. So basically, your debt becomes less and less and less.
Yeah.
But you can be sure that you won't get liquidated based on that collateral. So that's really the perfect asset in that sense.
Yeah, I love it.
Yeah.
Okay, fair. Can you? So like just before this, you were talking about what I'm trying to do is trying to paint this or figure out this like bullish future. So you're talking about like now the goal is to be more like a bank, right? Like we set parameters, we're protecting prices, we're ensuring more stability. You mentioned two things. You said mint and sync and one other thing.
Yeah, flex loans.
Flex loans. Can you just give us a little bit of color on like what mint and sync is and what flex loans are and how that fits into stuff?
Yeah. I can. I'm not the best on the mint and sync part. I'm going to say it at the front, but I'll do my best to explain it. So what happens now is that Olympus owns 99% plus of its own liquidity, right? Why is that? Why isn't anyone else providing liquidity? Because in some days, I think we all remember, we had like 600 million in volume when we almost broke DeFi.
Those were the days.
But so why is it? Well, because we still have quite high inflation, right? At this point in time, it's 200 something. It has been recently reduced. So for the people that haven't looked at Ohm yet and still think we are at 5 figures, not anymore the case. It's still high, but not anymore that. So 200-ish% makes it that if you LP you're basically losing out on all these staking rewards, or like staking inflation, if I should call it better. And in that sense, you then have the problem that although you get the fees from your LP, you actually miss out on OHM, and you basically get diluted because the price of OHM could potentially go down because there is so much being emitted, right? Which we want to prevent with making it more stable with less inflation, but we can go into that later. But if we want to basically ensure that people can LP in that, or protocols can LP in that, what we want to do is allow through the sync function that these AMMs have to have the OHM in these LP pools to still receive these the staking inflation, right?
Yeah.
So that makes it much more interesting to use OHM as a counter as an asset, because basically, yeah.
I was gonna say, why not just do it against GOHM? Like, it's
because
not...
So GOHM is a bit of an issue. It has a couple of drawbacks where you would have to have a very good routing pool that is GOHM OHM, which adds like further friction to the system with like slippage, with like MEV bots going back and forth. That liquidity should also be incentivized in that way, and then you still have then the OHM port that still has the same issue, right? GOHM, and like GOHM is not being used as this the currency. GOHM is more being used as, okay, you hold it. And like it doesn't rebase, but like you receive it. Yeah, you receive the rebases through like the wrapping. But like this is more of the savings asset, while OHM is really the currency that's being used. So that's why we want to prevent any confusion with using it as GOHM as a counter asset, because you then still have OHM, and like it creates a lot of extra issues that aren't ideal for being a liquidity counter pair. So that's why we opted for OHM in that sense. So I think that's a better option there.
So that's exactly what I was referring to with the LP bonds, like the mint and sync. Like I think of early redacted, and like they were paired, and like that was the issue, that they weren't keeping up with some of the market cap growth of OHM. But like in the model that like this mint and sync model, is there going to be sell pressure? So like if you're minting OHM directly into a LP, wouldn't there be like 50% of it need to be converted to the other asset? I mean, I guess not if you're using balancer and it's not 50-50 as an LP, but would there be sell pressure in this mint and sync model? Does that make sense?
It's not sold. It's added. So the sync function of a V2 pair does this. So basically, it updates the XYK, like XY equals K part of the equation. In that sense, so it just like rebalances it. So
the price just changes to lower price for the next buyer.
Price just changes.
Yeah, so it's not sold, right? Yeah. So that's the main difference there.
Okay. And what was the loans thing, or what was the other one?
Yeah, so flex loans, it's not really out there yet, but like we already launched a proposal with Aura for this a while back. So what it actually does, and also I think with Redacted, it's just like we renamed it a bit, is where a protocol could basically say, look, we have this OHM, and we want to still, of course, own the same percentage of the network than before, so with the staking inflation and so on. But we also want to use it as an LP pair. So what they could do is they could deposit this in a contract that we together own. They deposit it there as GOHM. They hold it, but we actually give them an interest-free, like non-liquidatable loan against that of OHM. So that OHM they could then immediately pair with their own asset. That is then the liquidity, while they still own their GOHM, and basically it's going to pay back that interest-free loan. And it cannot be liquidated. It can be in quite like significant sizes. We're doing this with Redacted. We're looking at to do this with FiatDAO, I think, with
and can individuals can individuals get this loan?
No,
okay.
you can't, because it's a whitelisted thing, because of course you can then start to leverage it, right? Like in that starts to do give me 99 or whatever 47 flashbacks. I don't want it anymore.
Yeah.
So it's going to be whitelisted for like these big protocols that we want to work together, provide liquidity for them, and really again. Make that economy.
They solve similar problems. That's cool.
How's the loan denominated? Like, is it in USD? Does that make sense? If you're trying to repay, like
so it's an OHM.
What's it denominated?
It's an OHM, yeah. So
I know. Okay.
Yeah. So go ahead.
I was just gonna ask. So if you have like 1,000 OHM that you loan out, and they pair, we'll just use Aura as an example. They pair Aura with it. They owe you 1,000 OHM, or do they owe you with market cap growth? So like.
Just 1,000
like the
ohm
mint and sync will be used. It'd be 1,000 ohm that they have to repay eventually.
to
I'm just
keep
trying
the
to grasp
basis.
it for myself.
It's 1,000 ohm,
Yeah.
but the thing is like yeah, it depends a bit. They also hold still the geom that they deposited in the first place, right?
Yeah.
So they don't really run that much risk in a sense because they still have the geom deposited, which gets the inflation and the ohm itself. That 1,000 ohm will be less of the network in like a year than it is now. So in a sense, it's quite a unique case to build your liquidity.
Nice.
So,
One thing I wanted to randomly ask you is
Oof.
there's this convex pool that gets like 90% APRs. Like, how do I join this convex pool?
You can just deposit in there. No,
But then I get diluted. But like, how do I join this and get rebases? Or am I just no? It's just for the
yeah,
protocol.
you don't. It's just our little honeypot, sir.
Oh damn. Okay.
No, I saw you discovered that. No, indeed, like we have this small comics pool. We actually tried out a lot of different AMMs over the past months. Comics is one of them. We also had others, right? And we really checked then, okay, how can we best make use of our treasury assets to provide liquidity and so on. That's why we had this little convex pool, I think 5 million in there, which we basically bribed with all the convex that we held.
And then just farmed it yourself.
So exactly. So we're farming it ourselves. It's basically better than bribes at this point. So why not do it? Again, an example of how the treasury team makes use of the best possible ways to extract value. And Curve, for example, doesn't allow for mint and sync. You really need the balancers of the world and so on. And of course, Uniswap could also do it, but to have this for mint and sync. So that's why we opted for balancer instead of, for example, Curve.
Okay, that makes sense.
Do you know what the reason is behind that? I'm just curious, like why it won't work with Curve.
I think the architecture is different than.
It's probably over my head anyway. So.
Yeah, same for me. Like I wish I could answer that more in detail, but.
Yeah, I can add a question like regarding that though. Maybe not Curve specifically, but one of the things that I don't see a whole lot of with Ohm is like lending and borrowing. And I know that there was like a delta neutral strategy that I think like the calculator guy did like months ago, and like it everybody was messing with it at the time, but I haven't seen like anything for Ohm when it comes to like lending and borrowing. Like, do you guys have plans to work with Aave? Is there a reason you don't, or like what's that kind of market look like for you?
We would love to, right? Yeah, Vesta is of course is a good example.
I haven't played with Vesta. I know it, like, but I haven't played with it myself.
Sir, you have to.
It's basically get a stable against your geom, min stables against your geom on Arbitrum.
Yeah.
No, I mean I have geom, so there you go. I love that.
Okay, perfect.
So solved all my issues.
No, so of course we would like to be like to be as collateral on Maker or on Aave. We have these discussions going, actually meetings now this week again around this topic. It's just for people to really see again that Ohm has become much more stable relatively to the market even. It's really building that confidence up to make these protocols use as collateral, and I think it's inevitable that eventually that will come. But that's like our main focus of the partnerships side of Olympus to really get Ohm being used as a collateral as well, and to be able to loan against it. We had, of course, in the past we had Fuse where you could deposit it and
the good old
stables
days
against it. The good old days, some might call it. But that's of course not anymore possible. But we'll see what the future brings. But definitely a key focus point.
So that brings up probably a good point. Like I think when I was looking, I don't know exact numbers, but I want to say the majority of Ohm liquidity was on Arbitrum. So there's a ton of chains that you guys are on. I think it's like Arbitrum, Avalanche, Optimism, Mainnet.
Oh, like of the side chains, Arbitrum has the most. ETH
of the side,
most, but of the side
chains.
Well, or
it was pretty high for Arbitrum when I looked. I don't know the exact number, but
I think Proteus focuses mostly on Arbitrum, right? Because like Vesta and stuff like that is there.
I think that's where I saw the numbers was on Proteus, but I think regarding that conversation, like with Ohm liquidity, do you think there's going to be benefits? Like, are you going to maybe help protocols bridge to other protocols or like other L1s or L2s? Like, is that part of the game plan, maybe long term, because you have so much liquidity?
Using OHM as a bridge asset, or how do
Yeah,
you...
like using OM as a bridge asset, or your bridge in general. I just thought it was interesting how much liquidity you had across chains, and I think on a lot of L1s the issue is liquidity when you're talking about bridging. So I was curious what that looked like, if you guys had any plans to expand your bridge services.
Well, on the bridging side, I'm not very confident to talk on. I don't think that's like a specific strategy that we have. Although, for example, the Arbitrum part, it's indeed because we have so many partner protocols that are on Arbitrum, and in my personal opinion, Arbitrum is really the DeFi chain, or is starting to become that, right? We are trying to incentivize that. But much like, for example, the MIMS of yesteryear, or others, right? We would like to have indeed some tick liquidity on these side chains, so that other protocols that again use OM as assets to build on can start using it. And Arbitrum in this case is like the best possible example, because as you will do after this podcast, you can go to Vesta and get stables against it.
You need them.
I get paid. I get paid, by the way, 5K for every time.
Every time you say
Vesta.
Vesta.
Yeah.
I love it.
But no, that's it. And actually, it's very efficient to incentivize these. So that's why I think we were able to get like very good liquidity on these chains as well.
Nice. Okay, so we're basically out of time, but I want to ask you one more question, or well, two more final closing questions. Then I want to do a quick RFV update, because I think some people are asking me just in general, like across the cryptoverse. And I think that's interesting, just given that we're talking about Olympus. So first, I'll ask you those two questions. First one is just like, what's the update on? I know you're like you were working hard on Artemis, and there was like a grant and things like that. So I'd just love to hear how like that's going, and if you've like enjoyed it and things like that. And I'm also curious about, like, remember Zeus released that like stable swap protocol? Is that still happening? And then the last OM project was that which one was it? Oh, it was like there was supposed to be an OM owned DEX. I think it's called like Atlantis or something along those lines. We'd love to hear what's going on with that. Yeah, why don't you just give us an update on those small side projects in a minute, and then we go next
good. Let's start with the best one, right? So indeed, Artemis. So this is like kind of a dev school that I've built. Indeed, got a grant from Olympus, going really well. So we have now a POC, proof of concept, where we have, I think, 6 or 7 students studying to become developers already. So this is like an internal one, and in September we'll start our actual first cohort to teach people to become like these next generation DeFi builders. Really excited about that, and we got a grant of, I think, 50K from Olympus, which very useful, of course. Also talking to Arbitrum, for example, maybe some partnership there. Then the second one, stable swap from Zeus. Like this guy just has too many ideas in his head, right? If you talk to him, he starts like going off on all these rants. It's incredible. So this was just an idea that he had. He deployed it, didn't really think much about it, and then forgot that it existed even, I think. So that's nothing.
All right.
That won't go anywhere. And then Atlantis. So Atlantis was not an OlympusDAO, like OlympusDAO project. It was a project that was inspired by Olympus, and we really wanted to help them. They indeed wanted to use like make a DEX that where all these big protocols like Frax, Fei, like Tribe, Olympus, and so on went to with their liquidity, and that they could actually own it instead of Sushi, which is 70% VC owned, and Uni is Uni, right? So, but they ran into some issues, especially also with the current market and so on. So I think that won't go anywhere anymore, and like that's also a bit why we decided to go with Balancer in this case for a main liquidity hub. But there's like there's not really.
When does that go live? I saw that just pass.
Yeah, so it's going to be again in like phases, right? So we are in the next couple of weeks you'll see some liquidity move slowly to Balancer, and we do it like in tranches. So over time there should be a big amount over there. With indeed the 50, 25, 25 distribution between OM, ETH, DAI. Maybe some less ETH. We'll see.
Okay. And last question. Take off your Olympus hat. You're not an Olympus spokesperson. What are you bullish for? Like, let's say I'm a DeFi. I'm a dude coming into DeFi or coming into crypto, and I want to make a bunch of money. What do I do? Or like, what do I trade? what are you trading? What are you bullish for? I just have to hear like your generic Wartull alpha.
Okay. Yeah, so there's this project that I've been very, very bullish on, but the market disagrees with me. I really like Fiat-DAO. Some of you might know it. Basically, what you can do is you can mint stables against these fixed rate things like element or notional and so on, and you can basically loop it, right? So you could, for example, take one out of like 3% by September, mint stables against it, but at very high LTVs with like 96% or something, and then loop that over and over so that you get at the end stable yields very fixed at 20+%, which is extremely cool. But as I said, the market really disagrees with me. I think they're trading at like 1 million something.
Wow. I mean, if that can even get to 10 mil cap, you're printing. Yeah. And I think they just started doing some Aura shit too, so I'm sure small
exactly.
all over it.
That's the small bridge that I wanted to make. So then you can do that on Aura. You can provide again there for 20+%, I think now, some liquidity, and there's stable pool. So again, stable pool liquidity 20%. Go over at Aura, and I really like Aura as well. But yeah, they're still, of course, bootstrapping. We'll see.
I actually sent that to DCF too, the fiat pool, like after last week's show.
Yeah,
after last week's show, I was like, hey, check this one out. I haven't had a chance to look at it yet, DCF. But,
I feel like that tip would make listening to this entire podcast worth it. Like,
for sure.
Yeah.
Because everyone wants to get their hands on Aura, right?
Some yield.
This is the perfect way.
Great yield, yeah. And you can loop that. I didn't even realize you could loop it. That's amazing.
Yes. So.
Yeah, you don't have to show me Aura. I think I've been like the resident cheerleader of that lately.
The yields are going to 0. Do not farm that pool. It's mine.
Yeah. Did you have something deeper there, DCF?
No, that's all.
You good?
I think that's great alpha.
I did have one more.
Yeah, go ahead.
One more quick question. I had this on my list, but like I love your website. You guys have one of the best in the game.
Mm-hmm.
You know, we talked about that earlier. With some of the bridging stuff, like feel like there's a lot of opportunity for you to branch into a ton of chains. Do you guys have any like plans to do maybe like a mobile app or any onboarding directly into Ohm? I feel like that would be a massive market, especially as you guys branch into liquidity for all these projects.
It is. We had like a hackathon a while back where people literally made an app for it in I think a couple of days. Yeah, the thing is, you need to get it on an app store. The app stores are very against crypto stuff, or they want regulatory scrutiny.
That makes sense.
Yeah. So from that side, let's get the legal side done first. Like we were also working very hard on that to get like everything set up in such a way that they can't really turn us down, and then start pushing for that. But we don't want to become that like the hacks of the world, right? Where we're like only retail focused. Because almost is quite. It's not difficult to understand, but you need to have some understanding to be a knowledgeable investor in it. So we want to prevent becoming too normie oriented for now. Like that's like the growth phase that we have to go through in like a year or two.
Yeah, I just thought it cuts out a step of onboarding of picking up whatever that L1's token
very
is.
True.
And like it makes it very nice as liquidity gets deep. But I guess that's longer term. But I'd be excited for it. I think you guys would crush that, especially with your front end. Whoever your front end team is, tell them props from small cap. But that's it for my end. You want to do an RFV update, DCF?
Yeah. That's there. Well, there's two things I want to do. First, I just want to do a quick Anata update. So as you all know, Anata NFT is the NFT small cap in IR being. It's one of the coolest NFTs. You just copy the NFT and click one button and it'll start tracking your face, and as you move it moves, and it's all nice and animated and everything. But it's more than that. It's also the best identity. So one of the cool things we've been doing is we've been making profile pictures. So one of the problems with having a NFT you can be is it's hard to set it as your profile picture and like really get a nice one. But our art team is making beautiful one-of-one PFPs for every holder. You just need to make it your PFP, make it your Discord PFP, join Discord, and like say a little hello, be a little active, and we can make you a beautiful one-of-one PFP like this. So on Twitter and across the verse, you get like a really unique profile picture that has expression and everything. It isn't just some like generic algorithmically generated thing. These take like a lot of time, like 1 day plus each. So really beautiful work. So I wanted to highlight that. If you have an Anata, come in Discord, get yourself a sick PFP and use it. And then the other thing I wanted to highlight is breeding. So right now we're working on breeding, so we're making little chibis. So you'll be able to choose your Anita and another Anita, and if both opt in, then you'll make a little chibi Anita. And the chibis have full hand tracking, so you can see in this video, as you move your hands, the chibi moves its hands, and you can click a button and flap its wings and things along those lines. So we'll see it wave just now. Do a little wave. There you go. Really cool. So can't wait till small cap and are using little chibis. Hey, maybe me and you can make a little baby too. That'd be a bit fucked up.
I'm open to
There we go.
breeding with somebody.
Hey, there we go.
I don't know.
Jesus Christ.
I got some breedable Anitas. You get it up. Maybe not. Maybe not DCF directly, but I got a lot for you. And then, the last thing is just the breeding site. So here's a little preview. It's going to be up and live soon, but you'll basically sign a transaction to prove you own the Anita, and then it generates a link, and then you send it to your partner, and then your partner will sign a transaction to prove they own it, and then your breed will be confirmed, and then we will make you a one-of-one chibi and airdrop it to your wallet. So I think that can be really fun and really unique. So cool update on Anita NFT. Now on the RFV stuff. So I got a message that someone was just curious about like updates there. So I think a lot of what happened was a lot of these ohm forks, they ended up trading below backing, and ironically a lot of us made a lot of money on them trading below backing than when they were trading above backing, which is hilarious. But a lot of them have kind of played out, right? And I think what's cool is 2 projects so far have naturally traded back above backing. So Olympus being one of them, it traded below liquid backing for a bit. Then they did reverse bonds, and the reverse bonds obviously worked, and now they trade above backing again. And I think that was really cool because it both let people claim their piece of the treasury when it was below backing, but it also didn't mean give up the whole treasury right away. It was like very slow. So slowly as the treasury was spending its assets, you also had time to build product, and people got to get bullish again and believe you would protect backing and then trade above backing without giving up a lot of the assets. So I think more projects should consider reverse bonds. That worked. And then the other one that worked was Umami. I think it's Umami. Unami, right? Yeah.
Yeah,
So they
Crypto
traded.
Condom and
Yeah, Crypto Condom really
all
led
those guys.
a lot of the marketing on that one. And Zero X Carnation, I think, is the founder. But that's traded above backing very naturally when one's trading below backing, and that's just because they managed to build really unique products that people wanted and they wanted to have the revenues from. So both of those strategies do work. But so those are 2 that did work, and then other ones that did that fell below backing did things like one-time claims, or some of them just said like, okay, we're done with this, and did a full distro. So what's on the market today is I like these trades because what happens is you can buy them and you get really good WAGMI vibes, which is like, hey, best case, the products work and it trades far above backing and everyone's happy. But worst case, you end up just trading at 1x cash. But the downside to this is it requires a lot of trust, right? The protocol could kind of sit there forever, hoping that backing goes lower and lower and lower so the dev can like buy a bunch of then distro. And that's why I think like the ones we have left are a little bit more on the sketchy front, but I think if you read between the lines, you can still find some wins. So I think the main 3, I don't know why I still have this on the screen, but let's bring up Deck Screener. So, actually, I have to bring up.
No.
I have to bring up Deck Screener because Defined doesn't have Temple because Temple trades on its own AMM. So, like, see, it only thinks it has 40K of liquidity, so I have to bring up
We're a
Deck Screener.
Defined podcast, though.
Yeah, we're Defined maxis.
Yeah.
But yeah, I got to bring up Temple here. But so Temple is a really good example. And like what I like about Temple, or why I bring Temple up often, is because like the team is more, I'd say, like vocal than other teams in terms of like what they're offering. They're obviously shipping new products. There are issues here and there. They do shit on me every now and then. We've gotten into some like wars on Twitter and whatnot. But that's just because I fight for like at least getting 1x backing for all holders, whereas they fight for 0.5x for all holders. But I think that's a conversation that's been like played out so many times. And now the team kind of has this stance where they said that after 3 vault cycles, they will assess and the backing is real, and we will hopefully trade back to backing, or they'll do something trade back to backing if they don't hit certain success metrics or they don't consider the current products a success. So we've gone through like 1.5 vault cycles now, and we still trade around 68 cents. But I would say the vaults and stacks and the products they're built are working quite well. So I'm wondering what the metrics are going to be. Are they going to be like the products work, or are they going to be that, oh, it trades below backing still? I obviously think it should be that it trades below backing still, but I think in 6 weeks we'll get a lot of clarity. So you're seeing accumulation. Like I've been buying here. So every time it kind of like sells off, I've been buying a chunk, but other people buy a chunk. But around like the 68 cents mark, I feel like is healthy, because at 65 cents, the protocol is guaranteed to buy back like infinite amounts because they have that like IV floor, but they don't have reverse bonds or anything like that to drag it up to RFE, which is at $1.10, which is their book value. But we'll see what they do 6 weeks from now. So I think for Temple, it's worth just like staying in Discord.
What's 6 weeks?
Keeping your ear to the ground.
Like
6 weeks is when the 3rd vault cycle ends. So we're halfway through the 2nd vault cycle now. So they said after 3 vault cycles, we will assess RFE. So what is it? TempleDAO.finance or something like that.
Well, everybody who sells into that like IV or like 4-layer that they built,
what is it?
Like the rest of the holders actually gain share. Like the more people who actually sell at that long.
If you sell into 65 cents, but it doesn't trade at 65 cents, trades at 68. Like there's enough buyers to hold it above. So right now it's not like the value is being distributed. It's just going to the next buyer, right? So that's why I like reverse bonds, because with reverse bonds, no matter where they buy, as long as they're buying below backing, it's getting distributed to all holders. So it creates value for everyone instead of just the person that bought below. It's kind of like a little bit of arbitrage, but you can see in the timing, you can see where they are. So they're in the 2nd sub vault. So when they hit D, that will be the end of the 2nd vault cycle, and then the 3rd vault cycle will start August 6th. And then I think at the end of the 3rd vault cycle is when they said they would like bring up the RFE stuff and consider it and whatnot. So I would say if you believe the team is like trustworthy and honest and they are going to protect their backing and whatnot, then 68 cents is not the worst.
Last question on that one real quick. Are they still farming mainly convex with like the fracs that they own?
Yeah,
I haven't checked on Temple in a while.
They are mostly
I don't
farming
know their
convex,
strategy.
but they've recently gotten quite transparent, which is what I like. So if you do like the little game, I would recommend doing the game and joining the DAO channels. But in the logic chamber, they've been having discussions. So one thing that they just discussed was bribes on Aura, which you'll really like, because right now the Aura bribes are completely broken. I think it's like for every $1 on bribe spent, you get $5 of outcome of $5 of emissions.
Right.
So
Liquidity.
What they're doing is they're gonna put Temple DAI LP on Balancer and then bribe it on Aura, and then they kind of want to become like what Frax was to Convex, but to the Aura ecosystem. So they really are like on their game and they're doing stuff, which is awesome. Like the only thing is just like, okay, but like how do holders get value from this, or how do we trade back to backing? But the products they're building, the ideas they have are really good. I just always try to see through the BS or like the Twitter wars or like the way we battle. At the end of the day, I see stuff shipping, which makes me happy. And then the second thing that they just put up a proposal for is StakeDAO. So they're considering taking all of their convex curve LP in convex and moving it to StakeDAO liquid lockers because they can control more curve. So they're still doing stuff. I like it. I think there's a lot of liquidity. It's like $40 million of liquidity. So like I liked it because you could size in without moving price that much, and then hopefully still get like worst case book value, which is like 1.1. But that's not a promise. I think they've gotten mad at me before for saying that and being like, oh, you made it a reality by saying it. But at the end of the day, in 6 weeks, they said they will assess RFE. So maybe wait 6 weeks, or maybe buy now if you think it'll play out. But in my mind, trades like this are very wagmy, so I like them. There's that one. Then the second one I think worth bringing up is SPA. So Spartacus. This one I think, Wartull, you have like a pretty good history with, right? Because Olympus tried to do that thing where they were like, okay, let's buy out sub RFE projects and give them like a bunch of the treasury. So the reason, so this trade's like very far below backing. I think
Is
backing.
this the FTM one? SPA?
Yeah. So
Yeah.
It is. This one sketched me out.
this one does
Yeah.
sketch me out because the dev doesn't ever say anything. But
Yeah,
the
he just
reason
like disappeared.
exactly, he just kind of vanishes.
Yeah.
But like I DM him every now and then and be like, "Are you guys still going?" And he responds like, "Yeah, I'm still going." And I'm like, "Okay, cool." So I guess they're still working on it, but they haven't shipped in a while. They made like a fork of Andre's VE33, like a Velodrome competitor. And nothing's
Ooh.
really happened. It kind of just like sits there. But their backing, I think, is yeah. So backing for Spa like with is like $30, but that's like the advertised backing. I think the real backing is closer to 40 if you do the like remove the LP half and yada yada yada. So the reason I think it's okay, like I would call this like 50% risk, 50% not risk. I don't know
No.
how to really maybe even worse,
Yeah.
worse than that. Wartull thinks
Worst.
it's worse
Yeah.
than that. Yeah, but they have
Oh,
in the past they did do it once. So like a few months ago
did
they
they?
gave
I didn't
everyone
know.
backing, and that's what makes me think like okay, well if he did it then, why would he not do it again? Again, I haven't personally bought yet. I have a little bit, but I haven't like really sized in. I'm kind of just like waiting, seeing if they ship new features with the AMM, seeing if those features generate revenue, seeing if they start distributing some of their yields or their revenues to holders, or just doing like something to give value to holders. And then that's when I'll be like, okay, it's probably worth buying. So for me,
Yeah.
haven't bought yet, just eyes on it. They've done it in the past, but like these guys are saying, and I also agree, it's like probably pretty high risk. Um, and then
I remember
the
buying like
yeah.
like peak RFV season, and like as soon as I did, like a rogue like team member was like, "Yeah, we haven't heard from the dev in like 3 weeks." Like
Yes, I
not even an
remember.
hour later,
I ran
and then
away then too.
I lost a
Yeah.
decent amount of money, and then like got out, and then like the dev showed up like a day later.
Yeah.
Like I have the worst luck ever when it comes to playing some
I
of
mean,
these,
the
but
To
dev,
own
that
I
forex?
think
could
he's
be.
watching. But yeah,
Yeah, I might be. Well,
he's
Probably.
watching.
glad you're around.
I mean,
So,
I
so
haven't
That
I
means
haven't
my own
bought too much
fault.
yet, but I
so how
want to
many
buy it.
own forex? So how many own forex did you personally kill, DCF?
That what not
All of
kill,
them.
help them do the right thing and give the
Yeah.
value. Like if you advertise a RFE, like you're literally saying this is the risk-free value. You're saying risk-free, you will get this much value. And then if you trade at like 1/10 of that, how on earth was that not a lie, right? Like some of them outright, like even Temple, they outright tweeted like if it falls below risk-free value, you will be able to have a claim on treasury of XYZ, right? And I think that's very blatant, and I think it's like the right thing to do if you advertise a risk-free value and people buy it because they have a risk-free value, and you say there's a claim on treasury and things like that, that you should at least execute on that, or at least have a way to get there, have like reverse bonds or something, right? Or try products and say if we don't hit this like certain date, then we'll at least trade to there. But like that's the promise that these projects made. I don't think if you have a treasury, holders should have claim to the treasury, but I think if you advertise a RFE and you advertise a claimable treasury and you advertise a backing, then you should worst case be able to get backing. So I would say like it
Yeah.
really depends, right? Um, yeah, and then the last one that I've been looking at that is so this one I would say is even higher risk than Spartacus because they don't have a history of where they've done it before. But there's a fork called Euphoria or like WAGMI on Harmony. And what was interesting was like this thing aggressively sold off, I think down to like, yeah, here. It almost went to like $1. Yeah, it was like $1 or $2. Yeah, it was crazy. But the RFE I think is so right now it trades at like 30. I think the RFE is something like 100 or 90 or something like that. So it's still like 3x to backing. But the difference here, what happened was the Harmony bridge hack happened. So everyone thought they lost their entire treasury in the bridge hack, but the dev actually took the funds and moved them off Harmony and is farming on Ethereum. So although the token is on Harmony, the during the bridge hack, they didn't lose the treasury. It was sitting on Ethereum. And then I think people realized that and then it like kind of like got sent again. But they've made no they've made no promises of getting back to backing. I think people have asked about it a bunch of Discord. The dev is like a lot more responsive than the Spartacus dev, which I like, but they haven't found any way to deliver value back to holders. So again, there's no revenue share, there's none of that kind of stuff, which I don't like. So Again, I'm in a similar place where I bought it a bit because I was like, okay, this is way too far below backing, but then it traded up and then I sold it. And now I'm kind of just waiting to see if they can do something to deliver a little more value back to holders. They don't have to like full RFV, but maybe they can distribute the yields, or maybe they can start doing some reverse bonds, or at least do something like that. And then the last one that I was looking at is Concave. So we have this like chat on the side of me, Wartull, and Small Cap. They're like, "What the hell are you smoking? Why are you buying these things?" But like straight up, I'm not buying these things yet. I do think that Euphoria and Spartacus are probably a little too high risk right now. So that's why I'm mostly just watching them. So I advise you to do the same. Just watch, join the Discords, and then when the time is right, when they start delivering value back to holders, then I think the risk of them drops. But right now there is rug risk, there is risk they won't protect backing and things like that. But then the last one is Concave. But I cannot bring up Concave on here. So, oh, you know why? It's because they have their own AMM. So in Concave, they have their own. Yeah, you have to use their swapper. So what I dislike about Concave is they have a lot of inflation coming. So if you look at their treasury, like I talked to their team in Discord and whatnot, but they advertise the treasury value per Concave is $43, right? And it's like pretty explicit. And like, oh, we trade at 8, but it's worth 43. But okay, so how does it get to 43? And they've explicitly said that they won't protect backing. So this isn't actually like a backing or anything like that. So one, that sucks. And then two is there's this bubble T Concave, which is pretty aggressive. I think if you remove the Concave, your assumed like inflation rewards, like let's say it didn't inflate anymore and all the bubble tea Concave vested, I think you end up with something like $12 to $15 per Concave as being the actual backing. So that's like pretty scary to me because you're getting diluted to, and staking doesn't help those emissions. It goes to like other investors and things like that. So I think if you're gonna do this one, you have to really make sure you stake in the 360-day pool because you have to make sure you're keeping up with emissions to not get like aggressively diluted by the bubble tea people. But they don't see their treasury, and they've explicitly said they don't see the treasury as backing or anything like that. They want to make products that generate revenues, and there's a little bit of like kumbaya stuff with the bike riding and whatnot. But I love that guy. Like I did a call with him, and he's actually like hilarious. He has good vibes and things like that. But I do think there's a lot for them to fix. So I'm not bidding Concave just yet. But the treasury value is there. So if you're interested and you want to be aggressive and get in the Discord and really help like push them along, then that's an option. But for me, I haven't bought the last three. The only one that I am exposed to right now, the only RFV play I'm exposed to right now is Temple. Oh, and the last one I'm actually considering buying is W Memo. Wow, there's so many.
Yeah, you just rattled off 6, I think.
Yeah,
6.
W Memo has like so they did their quarterly redemption at like 32K plus a bunch of BSGG. I think it ended up being worth like 35K. And we talked about it on stream, so that was a great trade for anyone that took part in it. But since then, it's like sold off to 25K. And the last vote was literally quarterly redemption. So next quarter there will be another redemption. And right now the best way to see the backing is to go to frogs.army. It's like a community made website. And load. This website here will show you the backing per. So the backing per is 33K and it trades at 25K. So there is some discrepancy here. And like within the quarter, I think the next one they said is in October, you should be able to claim like something around 33K. But they did do this like investment in Sifu. So I don't know if they consider the Sifu token liquid or not. So I would definitely go in there and ask them. So yeah, there's my RFV spiel. These guys are like aggressively shitting on me for the RFV spiel, but the whole reason a lot of these are underpriced is because they did something like super whack or super wrong. A lot of people dislike them, so their token holders sold it off, so it trades below backing. But hey, they all have a chance of redemption arc, so hopefully they all do make that redemption arc. right?
you
And
As
they buy-
soon as inverse bonding code is released for Ohm, like
yeah, they
ECF's
can
entire
all use
investing
bond
strategy is
protocol or
screwed.
something
Oh my
like
God.
that.
You realize you ended that entire monologue with, but they just bought a lot of Sifu coins, so I don't know.
I just removed okay, but Sifu coin, like if you look at it, it's actually just like Wonderland Sifu's vision. Like it's redeemable Wonderland. It's like a treasury he manages, and hopefully he makes money, so then the backing goes up. So
That's what it was supposed to be to
granted,
begin with.
you do have to trust Sifu, but I would say he didn't rug Wonderland or anything like that. And the backing is there, and they proved it was real last time. So maybe again they'll prove it's real this time, but God knows. Um,
Yeah.
and their new treasury manager is this guy named like Yield Chad or Yield Boss. But he's a really cool guy, and I've spoken with him before, and he's really smart. So I mean, I like him. Hopefully, he gets voted in, and then if this thing sells off more, I'm gonna do the math on like what is liquid backing, if you exclude the Sifu token stuff, and then I'll say like if there's some discount to that I like, then that's when I'd start buying. But I haven't bought any yet. So yeah,
Actually,
RFV update.
I have an RFV one for you that actually, like, it's one to keep an eye on, I guess. It's pumped since yesterday, but it's Maya, like MAIA. If you can pull it up if you want, I put it in the Discord. But
Sure.
like it's actually on Metis, and like the Metis, I want to say,
Isn't Metis
I would say
TVL
Metis
like nothing
it
now?
fell to like 30 million, but
Oh
like
my
it's
God,
like
the
the
whole
narrative's
chain.
picking back up.
All right.
Well, so like they just released this yesterday. So like Maya was like a I want to say the launch platform for Hermes, which had like a massive like cult following when it first launched. And they just announced that Hermes is going to be an omni-channel like DEX going forward, and they're like starting their own protocol. So this actually exploded yesterday. It went from like, I mean,
Yeah.
market cap's tiny. Like I think the RFE is like 2.7 million or something.
Oh,
But
okay.
like if you actually look at Hermes
Is it
and
actually
like their
150K
omni-chain,
cap?
it's like 2.5 million. But
Okay, yeah,
both
your phone
Hermes
says it
and
now.
Maya like started to explode yesterday. Crypto Yield Info was tweeting about it. They
Of course
started
he is. I don't know how that guy keeps
yeah,
up
he
with so
was
many projects.
I mean, I think he was pretty close to I think he was pretty close to like some of the meta stuff, but I mean, like I was reading through it and it's pretty bullish. Like I mean, the Hermes like V2 where they're going complete omni-chain using like Uniswap V3, like it's like pretty sweet stuff. So Maya like DAO was one where if it falls below RFV, which like it was yesterday, I would keep an eye on it because it pumped like 300% or something since then. So pretty cool one. But that's my contribution to RFV.
Amazing.
The
All
only one I
right.
got.
I think that covers everything. Thanks everyone.
Yeah.
Once
Yeah.
again, you can get rugged on those projects. They are trading below backing, for a reason. But the only one I trust so far has been Temple. The others I have, and of course like Wonderland, but already got redeemed. And I think if it's like worth accumulating for the sole purpose of RFE, it might have to go a little lower because of liquid backing. But the other two, they're just in like a really sketchy place. So I wouldn't buy them yet. Just monitor and see how you feel. Cool.
With how many went to zero, it's like that much more impressive what Ohm's doing. So.
Yeah, Ohm has done a great job, and good
Full
job.
circle.
I think like you're the only project that's like your 300 million cap. It's very hard to move something from below liquid backing to above liquid backing when it's that heavy of a market cap. So a lot of people are still holding and trusting and winning alongside with you, myself and small cap included. So good work. We're really proud of you, and I'm so glad to see it continue winning.
Yeah, thanks for coming on as well. It was good to
Thank
have you.
you.
It was a fun conversation.
I had a good time. Thank you for having
Yeah,
me.
it was a lot of fun.
Yeah.
All right, I'm gonna end the stream. Peace, y'all.
Yep.